Okay, so um, hello, my dear students. Welcome to the second part of our discussion in the foreign currency translation adjustment. Na ang given data is 2 years. And in the previous video, we have discussed the current rate method. No? But in this video, we shall be using the same illustration pero temporal method yung um, gamit natin to translate this foreign currency financial statements into representation currency of the Philippine parent. So, in the current rate method, di ba, mas better na unahin natin yung income statement. But for temporal, mas better na unahin natin pag-translate yung balance sheet. Kasi di ba, gawin natin yung balancing figure sa retained earnings. Kasi sa current rate method, ang ginagawa nating balancing figure is cumulative translation adjustment. But for temporal, di ba, ang balancing figure is si retained earnings na naka-embed na yung remeasurement gain and remeasurement loss. Okay, so since we do have total assets of 8,512,500 on December 31, 2012, and then for temporal method, we need to classify assets into monetary and non-monetary. So we have monetary assets, we have cash and cash equivalents and receivables, diba? And itong inventory and property, plant, and equipment is a non-monetary asset. So for monetary assets such as cash and cash equivalents and receivables, we shall be translating that using the exchange rate, no, the current exchange rate, which is diba, 42.5 on December 31, 2012. Okay. And then for inventory, no, so since hindi man given if when siya acquired, no, exactly. So we'll use na lang the average average for the fourth quarter for 2012, which is actually 42. So you have 100,800,000 for the inventory. Again, for cash plus equivalents and receivables being a monetary item, we'll use the current exchange rate. But for inventory, we'll use historical rate. And then for property, plant, and equipment, so it is assumed that it was acquired on January 1, 2012, which is actually the date when the subsidiary was formed, diba? So you have 44 as the exchange rate then. So you have property, plant, and equipment at remeasured in Philippine peso of 168,300,000. So your total asset natin remeasured at Philippine peso total is 366,318,750. Okay? And then our accounts payable and long-term debt, no, since this is monetary, so monetary siya. So we'll use the current exchange rate, no. Yun siya. So your accounts payable is 35,062,500 and your long-term debt is 205,593,750. So your common stock, of course, is translated using historical rate, which is actually 44, diba? On January 1, 2012. So you have 75.9 million. And then, yung retained earnings natin naman, gawin natin yung balancing figure, no? So, of course, your total liabilities and equity should equal to your total assets at 366,380,750. So, yung gawin natin yung balancing figure natin si retained earnings. So, you have 366,380,750 plus your accounts payable plus your long-term debt and your common stock. So, you have retained earnings of 49,762,500 in Philippine peso. Okay? So, after mo makuha yung retained earnings end, no? So, i-squeeze mo yung net income, no? Yung net income na naka-embed na yung remeasurement gain and remeasurement loss, di ba? So, we have here retained earnings beginning plus net income less dividends, di ba? So, we have retained earnings end in US dollar, in Singaporean dollars of 1,125,000. And of course, translated yan siya into peso at 49,762,500. So your dividends, of course, is translated at the circle rate of 40, diba? That was on September 2012, when the dividends was declared. So your dividends is translated at 3 million. So to determine our net income, since we don't have beginning retained earnings man, diba? So you have retained earnings and plus dividends. So you have your net income. No, kasi i-squeeze mo man yan siya, i-work back, kumbaga. No, so kumbaga, your retained earnings and plus dividends. Less retained earnings beginning, you have net income of 52,762,500. Okay? So to determine our remeasurement loss, so we need to compute muna our net income before remeasurement loss. No, okay. So we have to translate muna the components of our income statement. So your income statement, so for sales, so of course we'll use the average for the year, which is 43.75 for 2012, diba? Yan, 43.75 for 2012. And your cost of goods sold is translated or remeasured using composite rate. So iba-ibang rate siya. So per income statement, so we have the computation of cost of goods sold amounts to inventory beginning plus purchases and inventory end of 2.4 million. So we have cost of goods sold of 2.6 million. Okay. So since we don't have beginning balance of retained earnings, since this is actually the first year pa, no, when the subsidiary was formed, so we have purchases of 5 million translated using the average rate for 2013, which is 43.75. And then yung ending inventory natin, di ba, we'll use the average for the fourth quarter for 2012. That was 42. So purchases less ending inventory end. So you have your goods available for sale is 187.50 less inventory end no, of 100,800,000. You have cost of goods sold of 117,950,000. So your 2.6 million na cost of goods sold in Singaporean dollar is translated at 117,950,000. Okay. So you have gross profit of 89,862,500 and your depreciation, of course, since this is a non-monetary expenses and this relates to your property, plant, and equipment, so we'll use the January 1, 2012 historical rate of 44 no, for depreciation. And for other expenses, we'll use the average for 2013. Okay, so you have net income before remeasurement of 48,206,250. And since our net income, diba, as computed kanina, is 52,762,500. So, i-compare mo, so since nag-increase siya, so we have remeasurement gain pala. So, we have remeasurement gain of 4 million. So, you have, kasi that's 52,000 762,500, the net income, no, less yung net income before remeasurement na 48,206,250. So, yun siya. May remeasurement gain ka na 4,556,250. Okay? For year 2 naman, no, for year 2, okay? So, we still use no, the same process, no, the same process for year 2. So, gawin natin, i-translate muna natin yung balance sheet accounts. And then we need to classify assets into monetary and non-monetary. So, we have cash and cash equivalents and receivables as monetary items, diba? So, we'll use the December 31, 2013. Kasi we're on 2013, our year 2. December 31, 2013 na exchange rate, no, which is 47.5. Okay? So you have cash and cash equivalents of 17,812,500 and receivables of 105,093,750. your inventory, no? Since hindi naman diba nakastate when siya exactly na-acquire, so we'll use the average for the fourth quarter in 2013, which is actually 43. So you have inventory of 109,650,000 in peso. And then your property plant equipment, of course, you'll use the January 1, 2012 rate, the circle rate, no, of 44. So you have 151,800,000. So you have total assets in Philippine peso of 386,250. And your accounts payable and long-term debt, since of course it's a monetary liability, so we'll use the exchange rate for December 31, 2013, no, which is 47.5. So you have 53,437,500 for accounts payable and long-term debt of 203,062,500. Your common stock, of course, will use the exchange rate for 2012, January 1, 2012, the historical rate. So we'll have common stock at 75.9 million. So your retained earnings, no? So again, since your total assets is 384,356,250, and dapat mag-equal yan siya sa total liabilities and equity mo, no, na 384,356,250. So, di ba gawin natin is i-balancing figure natin si retained earnings. Okay? So, we'll have 384,356,250 plus your accounts payable, your long-term debt, and your common stock. So, you'll have 51,156,250 na retained earnings and as of December 31, 2013. And since, diba, we have retained earnings end of, so we have retained earnings of 1,462,500. It's actually your retained earnings beginning of 1,125,000 in US dollar, in Singaporean dollars, and then net income of 337,500. No, okay. So, yung retained earnings beginning mo, yung beginning balance is translated using the ending balance of your retained earnings last year, diba? Which is actually 49,762,500. Okay? So, yung net income natin, so of course, we are to squeeze that. So, i-work back natin yan. Diba? So, you have your retained earnings end of 51,056,250. The one we've computed kanina as the balancing amount, no? And then, gawin natin is i-work back natin sa net income, no? So, that's actually retained earnings, and since we don't have dividend, so deduct mo retained earnings beginning, okay? So, your net income pala, translated in peso, or remeasured in peso, is actually 2,103,750. So, sa 2,103,750, naka-add na dyan or naka-deduct yung whatever the measurement gain or the measurement loss during the year. Okay? So, to determine the measurement gain or the measurement loss, so we'll translate muna our income statement accounts. So, of course, for sales, we'll use the average for 2013, which is actually 45. Diba? Average for the year, 45. And of course, our cost of goods sold is using composite rates. So you have beginning balance of 2.4 million, diba? Translated using the average for the fourth quarter on 2012, or yung beginning balance ng inventory natin translated in Philippine peso, yan, at 100,800,000, okay? Plus yung purchases natin, translated using the average rate for 2013. So we have goods available for sale of 235,800,000. And then yung inventory end natin, we'll translate that, diba, using the average for the fourth quarter in 2013, which is actually 43. Okay? So you have 109,650,000. So your cost of goods sold is 126,150,000 in Philippine peso. Okay. So your sales is 180 million and your cost of goods sold is 156,150,000. So you have gross profit of 53,850,000. Your depreciation is measured or translated using historical rate at 44. So we have 16.5 million and other expenses at the average for the year at 19,687,500. Okay. So you have net income before the measurement of 17,662,500. Since nag-decrease siya, okay, so we have remeasurement loss pala. So we have remeasurement loss. So yung remeasurement loss natin, that is actually our net income, no? Then less net income before remeasurement of 17,662,500. So we have 15,468,750 pala na remeasurement loss on December 31, 2013, which actually will be presented in your profit or loss. Okay, so we can actually verify that 15,468,750 using the verification method. Okay, so you're, in the verification method, so we can will analyze if we do have net monetary liability position or net monetary asset position. Okay, so for 2012, diba? So we have monetary assets, no, total 2,287,500. This is actually based on our balances. Ito siya. Okay. And we also have total liabilities, monetary liabilities of 5,662,500. So your net monetary liability is actually the total liabilities and your total asset. So since mas greater man yung total liabilities kaysa total monetary liabilities kaysa monetary asset, so you'll have net monetary liabilities of 3,375,000. And of course, that will be translated using the exchange rate, no? On December 31, 2012. So, kasi we are to exclude no, the historical, non-monetary asset kasi walang changes, no? Walang changes sa non-monetary assets natin kasi they will be translated lang naman using the same exchange rate, no? Kaya we'll have monetary assets and monetary liabilities na lang. So your adjustment for change in net monetary position during the year, you have increase in cash in receivables during the year. So of course, pag monetary liability position, so mag-reduce siya if may sales. So your sales natin, diba, is 4 million, diba? And then of course, translated yan siya using the average rate of 45. So you have 180 million na sales. Okay? And then decrease in monetary assets or decrease in monetary liabilities. Of course, the purchases natin. Okay, translated using the average rate. Yan. So, pag may purchases, of course, mag-increase yung monetary liability position. Pag may sales, mag-decrease. And we do have other expenses of 437,500, translated using the average rate also. Of course, we'll exclude depreciation, diba? Kasi it's in non-monetary expenses. Okay? So, yung net monetary liability position natin translated using the exchange rate in effect at the date of transaction is actually the sum of these figures. We have 118,125,000, and then we have to get the net monetary liability position on December 31, 2013. So you have your total monetary assets of 2,587,500. Of course, based lang din siya sa given, no, na balance sheet. Okay? Ito siya. Then, the liabilities natin, monetary liabilities. Okay? Amounting to 5,400. Yan. So, we have net monetary liabilities, no? That's 5,400 less. 2,587,500. You have 2,812,500. Okay? And then, seeing the translated siya using the December 31, 2013 early. So, we have 133,593,750. So, you take note na nag-decrease siya. no? Ay, nag-increase pala. So, pag mag-increase yung net monetary liability possession, that means loss. O, decrease yan, that means gain. So, since nag-decrease siya, and nag-increase, means we have remeasurement loss of 15,468,750, diba? Which is actually same with the one we've computed kanina, no? At 15,468,750. Yan. Yeah, 15,468,750. Okay, so that ends our discussion for the temporal method using 2 years na data. So thank you for listening.